Alrighty, everyone. We should be live here. So I wanted to go ahead and do a live stream today because I understand things are a little bit crazy right now. So without further ado, want to go ahead and start by saying, what's going on, everyone? My name is Nicholas Merton here at DataDash. I hope you're having an okay day wherever you are. I can only sense not only with the market, but obviously what we're going to be talking about today. There's obviously a lot of negative things going on in the world. The world is kind of on high alert here with what's been going on between Russia and Ukraine over the past couple of hours and really over the past couple of days and weeks. I hope more than anything in this video to actually just focus on what I excel in, which is talking about the market and how I'm preparing for it. But before we dive obviously into the charts that I've got up here, I want to take a look at Bitcoin. I want to take a look at global stocks, US futures, everything we can get, to get a window of the sentiment check of where the world is right now. I want to go ahead and take a step back and have a genuine conversation. It's live, it's one take, so apologies if I don't deliver it very well. But I wanted to go ahead and talk to you guys as to why I don't want to speak so much about where I stand on the whole issue. For me personally, I'm not a geopolitical expert. I used to study foreign policy as a pastime back years ago when I was getting into politics and finance. It was one of the first topics that I really found a passion in. But I want to go ahead and say what is probably important for pretty much anyone to say, but I don't think enough people are saying, which is that this is not only just a terrible event, it's sad to see, but there's really no one side of the argument that's right in this situation. And most likely, none of us have a full, clear picture of what's happening between Russia and Ukraine. This is still relatively new developments. I don't want to sit here and act like I'm a geopolitical expert. And therefore, I would rather focus on talking about the markets. I know when I can talk about something and also when something's probably not in my ballpark, right? So I hope more people will come out and say that, especially during these conflicted times, because it's a very, I think it's a very controversial topic and stuff, especially when it comes to sovereignty of nations, war, who's right and who's wrong. Let's face it, guys. This is just generally a negative event. And it's sad to see overall. I hope more than anything, we can see a swift resolution of it. We can see governments coming together, negotiating, talking, and hopefully no one has to get hurt in this, right? Hopefully it'll be over soon. And that's something that goes beyond markets, right? We can sit here and talk about crypto. We can talk about how this is impacting it. But let's just remember at the end of the day that there are real lives on the line here when there are geopolitical conflicts. And I think above all, we should sit here and wish the best outcome, not for the markets, but for the sake of everyday people and us living our lives and living in this kind of eras-long peace that we've had here over the past couple of decades throughout most of the world. So anyways, now said on that, I hope you guys found some solace in that. As many of you know, I'm generally in Europe. And because of that, it's definitely something a bit close to home. So I wanted to go ahead and more specifically dive into the market here because I think it is important to spend some time going through and talking about the effect that this is having on crypto and whether or not, from my analysis here, again, from my understanding of where the conflict stands, where could markets be heading going forward? Okay. Now, we talked about in the last video something very important, which was preparing in this case for a certain technical setup, similar to that of the S&P 500, where we would come down, revisit our lows for Bitcoin's price, and potentially even break slightly below there. And I think that occurrence probably has a very good chance of happening, seeing us go somewhere between $28,000, $29,000 Bitcoin. I don't want to sit here and make that as an absolute call. You guys notice how I'm not shouting it through the roof and saying that it's certain, but the chances of that are improving, let's just put it that way, with what's going on right now. Now, I want to go ahead and again reassure, just like I said in the last video, I haven't been changing anything. My focus really isn't to trade financial markets right now. It's more just to kind of sit back, see what happens. But I again want to emphasize that things could get a little bit worse before they get better here over the next coming days, right? I know everyone wants to see the rebound. I understand that for sure. But for me personally, I don't try to trade these kinds of ranges. Try to sit back, wait for a more clear trend to suffice, and we'll see how things go, okay? Now, let's go ahead and actually talk about the effect this news has had on the markets, just to get a feel of where we are right now. It is without a doubt here that the conflict here over the past couple of hours has been dragging assets like Bitcoin down in price. And more specifically, if you want to see this, take a look at equity markets. You can look no further, obviously, from the NASDAQ and the S&P 500, which we will do. But take a look at the MOEX. It's one of the major stock indices in Russia. This morning, within the first hour or two of trading hours, the MOEX was down about 45% in a single day. To put this in perspective, and again, bear in mind, this is a Russian indice, right? To put this in perspective, this was the biggest single day decline in the MOEX that we have on record for more than a decade or more. This showcases that it's getting real. Tensions are quite high and people are a little bit concerned about the state of things, right? Now again, I'm going to stay out of talking about the details, what's going to happen, but more importantly, we can sense here that markets, like they tend to do in fearful periods, start to enter in towards periods where market order flow is dragging valuations and price to exacerbated levels. Now, we can see here that that's improved a little bit. We've started to see over the past couple hours that valuations have started to tick back up here. You know, maybe some of the selling was overdone here, was again, market flow dominant in this case, right? So that the limit orders on the order book, the buyers of the bids, right, were getting cleared through by people who were just market selling their shares in these positions. And this is following a whole round of sanctions and various different types of regulations that are going to come with this growing conflict, right? So that's again why we saw a major decline here, probably the biggest reason. Just again to put perspective on it and just how significant this decline has been, you've got Gazprom, right, which is one of the biggest gas companies in the world and the largest gas producer in Russia. Back here in October, sitting around right under $400 or 400 rubles per share. Now down to about 177. Most of that decline really coming in here over the past couple of days. I want to emphasize one big thing here that I think we need to realize, which is that there are no winners in war, guys. There is no winner when it comes to these geopolitical conflicts. And again, we have to only hope that things will start to get a little bit more calm here over the next coming days and that we'll have more geopolitical conversations around this issue. But it's not just affecting Russian markets, crypto, it's affecting US futures as well. NASDAQ, for example, or NASDAQ 100, right, it's a contract for difference being traded in the futures market, trading down from 14,000 points down to around 13,000 points, about a 6.6% decline. And the indice, we can see here again, this is continuing the sell-off within the general range that we've talked about. We talked about, I think, recently in the webinar for the Dash report, or we'd also talked about as well on the YouTube channel that we're expecting somewhere between this range of previous resistance back here, around 12,000, and between this range here of support that we saw. So we're already getting into that range where I think we're close to establishing the 20% correction, the typical bear market pullback. We already are down 21%. But we really think we've got a chance here to come down about 25% at this range, right? So that's what I would keep as a target here, somewhere between this 12,000, 13,000 point range. But again, the good news about that is that might mean that we're coming up here on the end of this fearful period. Tensions are riding really high. And it's going to take one of two directions likely in regards to how this gets resolved. Either this really serves as the first domino on a major geopolitical conflict where more countries are getting involved, more countries start making moves, or on the other end, which is, I want to go ahead and reassure you guys, the more likely scenario, at least according to history over the past couple decades, that while tensions are riding high, conversations start to begin and things start to de-escalate, right? It's not saying that they're going to get better overnight, but again, we're starting to enter into what I think has been a priced-in decline here of these conflicts, okay? So just putting that into context there. And again, just to reassure you guys, if you've been joining in here over the past couple of minutes, again, want to let you guys know, reassured, not making any changes right now, sitting on the sidelines. So yeah, one thing I think that's important to note here, if you, as you guys are obviously coming, I think to some degree for analysis on crypto markets, one thing that I think is important to note is that, and we moved it over here, we were expecting that the decline would be a bit sooner. As you guys can see, we had our drawing here. If I'll line it back to the original one. We'd had this idea that we were going to come back down here sometime in February. It wasn't meant to call for February 15th, but somewhere down here on this line of support before we would continue upwards in altcoin dominance. So I think, again, as we emphasized before, whether it's Bitcoin or altcoins, there is still probably going to be a couple more days of fear here. Whether or not you want to trade that or get out of the market, it's totally up to you. I really don't feel like doing that, guys, because we've already gone through a pretty good period of decline here in the market. We're looking at the 3-day chart here. So since January, of course, altcoins have been in this pullback, and we've been comfortable on the idea that, look, it's going to probably come down here, right? So until we see a little bit more blood in the streets in regards to the market, we're probably not going to see greener pastures for prices to move higher, right? So just an important thing to bear in mind. And one thing I want to go ahead here and talk about, which I think is very important to the context of financial markets and crypto, especially during this time when geopolitics are at quite high degrees of tension at the moment, or major geopolitical powers. As we talked about back in January, people were constantly saying, Fed is gun-ho on raising interest rates and reducing its balance sheet. And people were so confident taking it face value, and they're selling all their assets, this and that, right? I'm going to ask you all real quick. Do you think the Federal Reserve right now is eager to reduce its balance sheet by $50, $100 billion each month? Like some people were projecting. Like the financial analysts were projecting. I don't think they are anymore. First off, it was just generally talk. You never know if the Fed's really going to stick to its word. It hasn't done so for the past decade, heck, alone for the last century. And then you have another geopolitical crisis like this coming up. This isn't the time that I would want to, per se, de-expose myself to assets like Bitcoin once it's down, since its macro high back in November, down around 50-55%. I wouldn't be wanting to sell shares at a 20 to 30% decline when that's generally when bear markets, that's a textbook definition of a bear market in equity markets, is 20% drawdown, right? When tensions are at a very high catalyst point. Now, on the other hand, if we really started to deviate into a major global conflict where multiple countries got involved, that's what I would be concerned about. That's when the music stops. And you have something far worse than the COVID pandemic. You have something far worse than the 2008 financial crisis. And let's hope and pray that that does not happen, right? So anyways, there's been large conflicts like this before, guys. But again, I think more than anything, this event is hitting closer to home, to the West, because obviously it's knocking at the doorstep of Eastern Europe, right? So again, it's not something, again, I want to dive too much into, but I think overall, the major thing that I'd want to emphasize to you all right now is to just keep calm, don't stress too much, and more importantly than the market, think about those in the world and stuff who are caught up in this. Let's wish them the best. Let's wish the best for resolution. I want to go ahead and I want to open up some questions here in a moment, but I did want to share with you guys real quick that we've got a quick sponsor for today's video that I want to dive into, which is Celsius. So Celsius has recently launched Celsius X. This is the new merge from Celsius' traditional product suite going into the world of traditional institutions and bringing, in this case, more decentralized finance capacity out there into the world that's traditionally centralized. So there's a lot of really cool products that Celsius X is starting to work on, and I wanted to go ahead and dive into a couple of them real quick. First off, the wrap token platform. So allowing users in this case to bridge between various different blockchain ecosystems. Celsius has had a big emphasis on this, I think, in regards to bringing more transparency and the ability, or I guess more fluidity, between various different blockchain protocols. This is something that, again, a lot of people have been eager to see in the space as there's been more and more layer ones, cross-chain liquidity bridges. So being able to bridge liquidity between various different chains. If I've got a token on one chain, being able to move from one chain to the other and being able to utilize it in various DeFi protocols. And on top of that as well, we've also got actively managed stablecoins. So there's all types of really interesting solutions that Celsius X has been working on. It's been something that's been worked on behind the scenes for some time, and I'm really excited to see what the team will be able to do here with the ambitions of Celsius X. So if you guys are interested in learning more about Celsius X as a product, you guys can take a look down below in the description and learn more about what the protocol or what the project is doing in this case in order to expand DeFi out there into the real world and fixing some of the major gaps that exist in the current world of DeFi today. So without further ado, guys, let's go ahead, and I want to go ahead and open up some questions here, and we'll continue to go through the conversation, look at a couple different resources here in a bit. If you guys have any questions, feel free to drop them in the chat. If you guys aren't subscribed already, if you subscribe, that'll allow you to comment in the chat. Excuse me. It's just to prevent spam. So let's see here. Comment section is a mix here, guys. If you guys have any questions, feel free to drop them. Let me see real quick. As I would say in this case, is it worth buying now or should we wait? I would say, guys, look, again, and I really hate to kind of talk about things in market terms, but to be honest, I have a feeling that's what you guys are here for, to hear about what I'm saying in the market. I mean, we're clearly in fearful territory here, which historically is generally a good time to buy when there's fear in the streets. It's markets. But again, I'm not here to per se say that it can't get worse, right? The idea of what we're talking about earlier, and I want to go ahead and emphasize this for everyone. What we've been talking about is this idea of, obviously, since December, revisiting this range, and we're at that range. It's a range where I feel comfortable adding into the market if I had additional fiat. But one important thing to note is that we might see a rollover here below this low range here at 33,000, a revisit down here to 30K, and us entering into some kind of flash value here of, again, liquidations in the market, flushing out the margin traders and everything, coming down here to 28, 29,000. I really, back a couple weeks ago, to be candid with you guys and admit where I get things wrong, I wouldn't have thought that that was possible. We were happy when this came down to 33,000. And as you could see here in the price, things were looking like they were going to start recovering soon. But the macro picture has changed, right? And I honestly have to say, I think a lot of people, including myself, really didn't see that this could progress to this degree. Most of the kind of conflicts, like whether it be back in Crimea and a couple of the other regions in dispute over the past couple of years, usually these conflicts didn't escalate to this degree. So again, just to see this here and it getting a bit more real, I think that's starting to reflect in asset prices, right? But man, I know a lot of people brought up this interesting point, which is like, Bitcoin is supposed to be digital gold. It's supposed to be a hedge here, right? Gold right now is actually picking up a decent amount. If we take a look at gold as an asset, it started to, I'll go ahead and get a separate trading view chart here. We'll go ahead and take the MOEX. Take a look at gold futures. Gold futures spiking up here, having one of the hottest days on record, up 3.3% almost, right? And this is something we wrote about in the Dash report. I'll show you guys the chart here. 2-week chart. Actually, I think I'll do the monthly because I don't think it'll be able to show it all. Gold's been building a major cup and handle here since back in 2013. Now it looks like it might be finally ready to pick up some steam if this were to continue. All right, if this broke out into a global conflict, gold's going to be picking up steam. But a lot of people have been bringing up this important criticism here, which is like, wasn't Bitcoin supposed to be a global hedge against war, uncertainty, an asymmetric asset, like a lot of people have been propagating about Bitcoin? And to be honest, I think it's a very fair question to bring up here. The fact of the matter is, though, is no matter what someone has said or what people believe and say Bitcoin is, what narrative they chase, Bitcoin's never experienced anything like this. Especially if this continues to escalate, Bitcoin's never lived through this kind of geopolitical conflict, right? So if it were to go out into a war as a whole, then that would be something new for Bitcoin, right, as an asset. Again, I don't want to fixate so much on asset markets here, but that's something we need to consider here when it comes to Bitcoin as an asset. It's not impervious. Bitcoin, like any other asset, it determines on whether or not there are more buyers or more sellers on the market order flow, and also how the order book stands between the bids and the asks. Are there more bids that are willing to buy Bitcoin at a certain price to give it support? And on top of that, is there demand on the market order flow side that really will drive the direction? Or is the counter opposite true? Are there more asks on the order book looking to sell at any rebound in price, causing resistance for price to appreciate, and also more market order flow selling to the downside? That's what really determines price. Now, I do believe that Bitcoin having a finite supply is still setting it up. If we're really talking about the next, couple of years, right? Bitcoin is still going to outperform most global assets. That is, if assets continue to appreciate, right? We don't know what it's going to do in a time of fear like we live in now, right? And I think, again, guys, the important thing, though, again, is just to understand that what we're seeing here, don't get too fixated on the short term. Focus on what's going to happen here over the progressing days. We got to see how things are going to play out here. I guess I'm sorry, it looked like there was a drop off in the stream. Can you guys hear me good? Looks like there was a couple hundred views that had dropped off. Maybe it's just an error on my side. But anyways. Let's see here. Okay, thank you guys. Love the comments. It's always appreciated that you guys are. Oh, you know what? That was an error on YouTube's end. Yeah. Okay. Cool, guys. Let's continue the conversation here. If you have any questions, feel free to drop them in the chat. Let's see here. Ramek said, thank you, Nick, for the stream and sharing wisdom. Thank you, Ramek. I appreciate that. Yeah, I mean, I'll be honest with you guys. I don't want to... I know everyone's eager, whether it's a YouTuber, someone on Twitter, or a media outlet, to share their opinion on the situation. I studied foreign policy for a while as a personal passion, and I took a couple classes when I did go to university, but I'm not a geopolitical expert. I don't know all the nuance around it. So we'll have to see how it plays, and we have to wish for the best, guys. Let's see here. Emil actually brought up a good thing, and I'll be honest, I can't speak to it too much, but it's an interesting geopolitical thing that relates to crypto. Is he'd asked me, what do you think about crypto's usage from Russia, on behalf of Russia utilizing crypto, now that they've banned Russia from the SWIFT payments network as a part of the sanctions that have been implemented. And it's a really interesting topic of discussion. What is that? How is this going to affect, especially if Russia starts to utilize crypto as a means to do transactions or banking? That would be potentially, I think it would be generally a pretty neutral event. And the reason why is because all the while that would be probably beneficial for crypto in the short term. That would at the same time probably start to get the United States and its enemies, in this case, more involved in suppressing exchanges and doing all kinds of things that would probably disincentivize institutions from investing in crypto, which could be just as bad. So again, I don't want to speak like I know everything on it, guys. It's just my kind of theory. I'm effectively, sorry for my language, I'm shooting the shit, right? I'm just shooting out ideas. But yeah, I don't know. We'll have to see. Let's see here. Dan brought in a good point here. And I know this sometimes scares people because it sounds a bit crazy, but he said, only investing in crypto what I can afford to lose, as I expect it to go to zero anyways. Anyway, anything above zero is a bonus. That's what you got to think about, guys, with asset markets. You should always have, and I think as a lot of you probably do and stuff, you got to have some parked away, a good chunk of your money parked away for a rainy day. I really one thing I got really tired of in 2021 and 2020 was seeing people. He even had like, I think it was like Michael Saylor and a couple other people in the crypto community saying like, mortgage your home, do all this and that to buy more crypto. And guys, like, no, don't do that. You can already benefit greatly from one of the greatest asset expansions in history by just simply investing. You don't need to toy with leverage. You don't need to do all these things, right? And it's so sad to see people actually promoting that for everyday people to just take on excessive risk because you never know how things are going to play out. It doesn't even matter if the Fed keeps printing money. If the global markets are concerned about a geopolitical conflict, then your assets can still go down, right? Nothing is guaranteed or mathematically priced in. Anyone who tells you that obviously has no idea about asset markets, to be completely frank. So yeah, I don't condone or tolerate anyone saying, yeah, just like it's guaranteed, it's priced in, right? Now, nonetheless, I do think that crypto is going to be one of the best performing assets if we continue down the same path we've been through. And I think as time progresses still, especially in this period of inflation, I think it's going to continue to go for a while. One thing I wanted to show, and I can't recall, this might be I might have had a bit of a spur of short-term memory. One thing that I think is really important to understand, guys, about the Fed, and as I was talking about earlier, is this chart here. We mentioned this, I think, in a video or two back, and I think it's a really important piece of context to keep in mind. Now, a lot of people, again, as we talked about in January, were taking the Fed's comments at face value. They were saying that the Federal Reserve is going to raise interest rates multiple times. Even the Fed, I think, put out a statement recently that this is not going to impact. It might have not been from the Fed, but I think I'd even seen something where they were stating that this is not going to change or interfere with Fed monetary policy adjustments. And to be honest with you guys, I'm going to go ahead and call BS, put my name on it. I think it's bullshit. And the reason why is because of the fact, twofold. One, during a geopolitical conflict where equities are down nearly 20-something% and look like they're probably going to decline further, when markets and generally countries as a whole are at heightened fear like this, and they're really, to them, it seems like there's no sign of it stopping, right? That alone is already enough of an argument. But second off, the important thing that people don't talk about and aren't realizing, even though, of course, inflation is bad in the economy, it sucks, it shouldn't have happened, but it's here now and it's present. We need to understand that it's not only here and present, that it's probably going to be here for a while. People don't, and I think this is where people sometimes struggle, because this was back a couple decades ago when we had our last spur of inflation. Back in the 70s, inflation was in not only heightened single-digit territory for a long period of time, much higher than where we are right now at 7.6%, I think 7.5, 7.6. But it went to double-digit territory, and it remained in double-digit territory for a matter of dozens of months. It was a topic of national crisis for a long period of time. And until Paul Volcker by raising interest rates dramatically going into the 80s, inflation didn't tame, right? So again, this is a very key point to keep in mind here. And this is just a good way of visualizing here, right? This is from January 2020, right? Very similar pattern here to the spur up in inflation. And it shows just how bad things can get before the Fed really is going to pull the trigger, before it's really going to do something to counter the inflation in the economy. So that's, again, an important thing to keep in mind here, is that I think more than anything, the Fed is going to keep interest rates right where they are, and they're probably going to consider, if this continues in the next coming days and doesn't de-escalate, they would continue maintaining their balance sheet or maintaining even the QE program that they've been running for the past couple months and still have not stopped. They keep saying they're going to, but they have not. It's always moving the goalpost down the line, right? And I know I'm kind of getting deviated talking about the Fed here, but it's an important topic, and that's going to really dictate whether or not assets are going to appreciate or not, right? So anyways, sorry for my rambling, guys. Gita had asked in this case about like IDOs or like, you know, kind of like I wouldn't be doing any private investments right now. Like, I mean, well, it's not, that's a wrong way of viewing it stuff. If you have a project that's really fundamental and you like, I mean, investing as early as possible is the best thing you can do. Especially if you're in it for the long run, right? But I would say that I would only be wanting to do equity investments right now, you know, in real companies, not so much in blockchain protocols. Just my thoughts. Marisa, I'll say your question. Not my style. Let's just put it that way. Satan had said, "Are those dumbbells in the background?" Yes, they are. And I promise you all, they're not just a prop. Off the camera, you know, I put them to good use. Maybe I'll do a look. I'm not strong by any means and stuff, but I would. I was always joking. We had in the Dash report for a more lighthearted topic. We joked about how the dumbbells are always sitting in the background, and whenever I think we were joking at maybe 500K subscribers, or if I got my call wrong of going down to 30,000 to 35,000 for Bitcoin's price, which ended up being correct. If I got it wrong, I'd have to do a workout video for the Dash Report discussion group. But yeah, no, it's funny though. I always love it. There's like those small things, like people those of you who have been here for a long time, who follow the Data Dash channel, who have tolerated me all these years, which I appreciate. Some of you will remember I used to have my bed in the background, and we used to joke when I didn't have my bed made or something. People would be like, "Nick, like make your bed like before you do a video." Thank you, Marisa. I appreciate the comments on that. And Dan, he said he liked the wooden furniture. Thank you, guys. It is very IKEA styled. It was pre-furnished in the building that we moved into, so I don't know exactly where we got it from, but it's nice quality stuff. Anyways, all right, guys, I want to go ahead and get back on topic here, talk a little bit about some charts in the market. So if you guys have anything you want me to pull up around crypto space on the macro level, then let me know. Bruce Lee said you need to do an exercise video to pump you up. That's funny. Thank you guys for the kind comments. I appreciate it. But yes, I'm the White Rabbit said having the bed in the background was a good time, as were the music and the live streams. Yeah, playing the Midnight and a couple other awesome retro wave jams in the background was a lot of fun. Unfortunately, I think they started to when I was running in the background stuff. YouTube, of course, was detecting and stuff, so I had to stop doing it. Maybe we can get some good like non-copyright stuff to play. Random dude said he wanted to see the Fear and Greed Index, so I'll go ahead and pull that up here real quick. We'll do the one through looking at Bitcoin. Take a good look at it here. Is this really today's metric? That's interesting. Okay, I'll go ahead and pull it up here. So you guys know we talk a lot about the Fear and Greed Index, and generally how it's a pretty good sentiment gauge on the crypto market. The important thing though is that just because it enters into red territory doesn't mean it's time to per se buy into crypto, but prolonged periods of time where we're in this kind of red territory below 20 points, that's usually a sign where you're buying into a range that's more favorable than, you know, let's just say more favorable than history, right? If you're buying during these periods of time where it's been green for multiple months and you're starting to fade into the kind of yellowish green category between 70 to 80 points, right, that we saw up here, that's usually a telltale sign that things are starting to turn for the worst, right? Especially after prolonged periods of green like that. So yeah, I would say the Fear and Greed Index here, again, still highlighting that point that we're down in the discount range for sure. but I would say that it's not something I'm rushing into. What I would say is if you really, again, have money, as the gentleman in the comments brought up earlier in this case, that's money that like look like you really could afford to lose or see dip over the next couple months. I would say right now we're in that discount territory where I feel favorable starting to dollar cost average, right? Now again, you have to accept when you start DCAing or buying it on a dip, you could still be experiencing some downward turn here in the market. It could also be good that you wait for a trend reversal. You wait for higher lows and higher highs, but that'll probably mean you're going to be buying a little bit higher, right? There's no reason to want to try to time the market perfectly, guys. It's best sometimes just to kind of ride it through and see how things play out. Oh, Georgie said that the chart is wrong. It's actually in like Uber here. Let me see. Maybe I can get a different source here. It might not be an accurate one. Fear and Greed Index, Bitcoin. No, it seems like the sources I'm looking at are still saying it's at 23. So, yeah, but I don't think there's anything wrong with it and stuff. I think it's... Because Bitcoin's price, the important thing to understand, guys, is the Fear and Greed Index is, you know, Bitcoin dipped obviously another 5% today, but it was here back in early January, or sorry, excuse me, in late January. So basically where we were a month ago. Armin one said Nick looks like he's been crying. Guys, it's me not getting a good night's worth of sleep. We had some issues sleeping last night. But no crying here. I'm very, very content. More than anything, I'm hoping things, this geopolitical conflict is resolved and people can get back to their lives and stuff. I think we all wish that, whether it's in our neighborhood or somewhere else in the world. Jason asked, Nick, could you bring up the HODL waves and perhaps chat a little bit about how sentiment is holding up in those holdings? It's a very good point. I'll go ahead and bring that up, Jason. Give me one sec, guys. I think didn't look into Bitcoin at the HODL waves. I need to check that real quick. For some reason I'm blanking on whether or not they did. Yes, they did at the HODL waves. There we go. And I want to make sure we have today's metrics. We have the 23rd of February. But, I mean, let's go ahead. And I pulled it up here. Excuse me, I'm burping a lot, guys. Probably I shouldn't have ate breakfast before the live stream. Okay. So one of the things about the HODL waves that I think are really important to get a grasp of is that generally speaking, we know long term that, you know, generally because of lost Bitcoins and also because of, you know, just more people kind of holding Bitcoin long term and becoming long term investors, the longer term bands are always going to be expanding. What I like to do with the HODL waves is I like to de-highlight all of the long term bands and see how much is being held over the last 12 months, right? So how much Bitcoin has moved, in this case, within the last 12 months on chain. And what we find here is that combined, if we go across the board here, you can see that the line here really helps us on the x-axis. Excuse me, well, technically it's going across the line, but the chart, but it's on the y-axis here. We're right below about 40% here. Comparative to back here, where we had probably about 45, 46% back here in August and July. So a lot less Bitcoin have been moved within the past year here. Most of those Bitcoin are going to the longer band timeframes. They haven't been moving. And we can see here historically that number, you know, again, this combined number used to be about 75% back here in 2010. Down here, it was about 65% in March of 2014. Here we can see it was below 60, probably about 58% here in March 2018. And of course, this summer was around 45%. And now that metric is going down similar to the range we saw here in 2020. So we're not seeing any major spike of Bitcoin being moved. And that's the really important thing I want to emphasize here. Of course, all the while, we don't know how Bitcoin is going to hold out here in this geopolitical conflict. But what we do need to realize here is that on-chain, things aren't looking too bad. There's not any kind of out of ordinary moves of Bitcoin and other cryptocurrencies that we're not used to seeing in history. We'd see it here within the models and the hodl. We would see a spike up here if there was really a total panic when it came to Bitcoin. And even Bitcoin being down 5%, guys, you guys know this if you've been in crypto. This happens. Bitcoin has gone just in this past cycle through multiple 50, 60% declines in price. We're probably going through the later phases of it, right? And all the while, even though there are these corrections, right, we can see here that more than anything, crypto will start to move as prices start to appreciate, right? So the institutions, the big investors here, they're not making any major moves right now. They're not selling. So there's a period, they don't sell into fear, they sell into buy side activity, right? So again, I think more than anything, we've got a contraction of Bitcoin here. On the longer term trend, this is really nice for Bitcoin. It's very easy to get caught up in the short term here, guys. But I would say don't do it. Don't get caught up in the short term. Remember, a lot of people were telling me back here, Bitcoin's going to 15, 20K, overnight. And then Bitcoin's sprung up to $69,000. Right? Morton had asked if am I living in Ukraine. All right, guys, I won't tell you what country I live in, but I will say I'm not living in Ukraine. But I let's just say that I'm very blessed to not have to be caught up in this, and I wish everyone safety. I think I saw someone. So Xavier asked, "Hi Nick, how do you know if you should buy now considering to be greedy in times of fear, or if you should sell now considering the trend is your friend?" Xavier, I would say that one of the big points that I brought up, and sometimes for sure it hasn't always played out. One of my favorite principles that I think I coined the term on. At least I haven't heard anyone talk about it. But I think it's a term that we always, some people drill in their lives and stuff. I think it's important, is not getting caught 2 steps behind. Sometimes in life, and most likely than not, you will not sell the top. You will not be able to time the market exactly. You can look back and say, oh, I should have done this, or so-and-so told me to do that. Let's face it, most of us will not time the top. And also, many of us will not time the bottom perfectly. A lot of us won't want to buy something when it's 85, 90% down. We'll say, oh no, Bitcoin's trend is dead, this and that, right? That's generally what happens throughout history. What I want to emphasize with this point of not getting caught 2 steps behind, and to your question about, buying during times of fear, right? Or the trend is your friend, right? There's different perspectives you can share. I can say more times than not, it has helped me that when I get caught up in a position where I'd made certain returns and then the market draws down, right, to a period of fear, that if I sit on the sidelines, I don't do anything, and more than anything, I buy in to those dips, I average in, markets will come back stronger. Asset markets historically appreciate. I want to go ahead and show it. I think an important chart here. Anyone could pull up, I think, for example, the BLX chart. Right, we could take a look at Bitcoin's long-term chart here, and we can see that Ukrainian conflict or not, global financial crisis, pandemic, no matter what macro event, Bitcoin is generally trending up. Okay, we could take a look at the NASDAQ. Right, sure, definitely a little bit red right now, but if you look throughout history, would you have wanted to be in cash? Would you have wanted to be in assets? And really, did it matter, right? And this is I'll go ahead and just kind of highlight. Let's put it in a bit more of a shorter term time frame, right? So let's say, for example, you bought here in 2007, global financial crisis, boom, market down 55%. Right? After that as well, we had the flash crash here, 2011. You had the Chinese Shanghai composite bubble popping, the commodity crisis at the time that spooked markets, led markets down from, in this case, the NASDAQ down about 20%, a little bit less than 20%. 2018, Fed raising rates, had been doing so for some time, starting to taper the balance sheet, right? Spooked markets, dropped from about 8,200 points down here to 6,200. 2,000 point drop. The NASDAQ could never recover, right? Oh, well, in fact, it just did. and it went back up here towards near around 10,000 points on the indice. And then of course we had the global pandemic, right? And after that, equity started rising back higher. Now, it is important as well, if you want to get some kind of reading on adjusting it for inflation, you can divide it by the money stock, right? And that is an important thing to do here. We can see here that the returns are probably not as great as people thought when they adjusted for inflation. But would you have been better sitting in dollars, right? Your purchasing power of $1? No. Equity still appreciated. Even with all these constant moves in the market, equities have been on a rally since 2009, even from here in 2006. And this is just if you're buying into the indice. And this is again adjusted for the money supply increase. Still doing really good. And we've seen, historically speaking, that the Nasdaq has gone even higher in the past. And that there were many dips like this in the past where we went from 48 down here to 32, right? It's very typical for equities to make these kind of corrections. So, again, just an important thing to remind yourself that we've been through these kinds of things before, right? Asset markets as a whole, not just crypto, are not for the faint of heart, or I don't know if that's the saying, but basically those who can't stomach the volatility, right? So, awesome, Jason. I'm happy you enjoyed the content there and the sentiment. Let's see here. Couple good questions coming through here. Let's see. I think I'll do one or two more questions, and then we'll wrap things up because I think we're coming up here in an hour on the live stream. Right? Yeah, or 46 minutes. We'll go ahead and do two more questions here, guys. Tony had asked this, and I'll go ahead and answer it again. He had asked Nick, if you were to take a wild guess, what do you think would be the max bottom now in price? I think the worst max pain scenario is what we saw in the S&P 500 back here during the recession. Right, we had the breakout rally here, similar to what we saw in Bitcoin in 2020. Right, neutral period here where momentum really starts to kick in. Then we have the pullback here. Again, just want to clarify, I'm looking at the S&P 500. I'll showcase what I mean by this in regards to Bitcoin in a moment. Right. I'm talking about a repetition of this pattern here, right? Two declines, the second one being probably worst case scenario, a little bit more significant than the previous one, with a stark rebound afterwards, with the third time being the charm. And can you guys hear me good? Okay, so I'll go ahead while the connection is still all right. I'm going to go ahead and run through real quick and talk about the last chart that I think is important to wrap this up on, which is how bad could things really get? And you got a lot of people salivating on the idea that Bitcoin's going to go down to 20,000, this and that. And look, possibly, but I really don't think anywhere in history we've seen Bitcoin come down to its previous all-time highs from a cycle multiple years ago, right? We just haven't seen that. But the interesting thing that I will say that you guys should be prepared for, if you take a look at this pattern here, does it look sort of familiar to the S&P 500 chart we just looked at, right? Okay, I'll pull that up again so you guys can see this here. I'm going to go back here, put it on the weekly, try for drawings. Look a little bit familiar. Bring here the monthly, make it a bit cleaner. Looks pretty similar to what we're seeing right here for Bitcoin. I think what we've got is a chance for us to come back down to this range here, 28, 29,000, spook people, and then market order flow just switches bullish. Right, we'd originally projected the idea that we come down to this range here, but it might get a bit more bloody before it gets better. And that's just something you got to be able to stomach, guys. If you can't, it might mean you're overexposed. You might need to take some chips off the table. But to be honest with you all, I haven't changed anything. I'm still in my positions, and I'm willing to face the reality that we might have that kind of dip here soon. Could very well happen. If you're into trading the market short term, if you're into taking excessive risk and leverage trading, doing this and that, that's totally fine, but I'm not going to be promoting that here. I'm going to be promoting the idea that, look, if you've got money to spare, this is a time generally where I would be optimistic. I wouldn't be getting fearful. If your time preference is more than a year or so out, then that's my mentality on things. If you're feeling overstressed, guys, if you're feeling like it's too much, if you're feeling like you're overexposed, it probably means that you might be. It might be time to take a little bit off the table, especially if you made life-changing returns in crypto, right? So anyways, yeah, I think that's a good way to wrap it up, guys. I don't know if it provides all the clarity you guys are looking for. I always try to do my best here. If you enjoyed this video and this live stream, I always ask if you guys can, just please consider dropping a like. It's one of the best ways you can support the channel and help get the content out there for other people. But I hope more than anything, it's been a good neutral video. I know that it's a time of heightened, a time of heightened fear and stuff around with what's going on. But we can only hope more than anything that this is going to end in peace, that things will finally be resolved here within the coming days, and that will not escalate. We can only hope that that's the case. We've been fortunate enough, a lot of us as the human species, not all of us, but we've been fortunate enough to live in a pretty peaceful world for the past couple of decades, and I can only hope we're going to continue to do that here. And it's going to rely on all sides of the conversation to come together, come to terms on things, make sure that no one gets hurt in the process. So anyways, guys, let's wish the best. It's all we can do. Call for peace, and I'll see you guys in the next video. Take care, everyone.